Okay, good evening. We should be live. Hope everyone had a nice weekend. Weather has been quite good here, so no reason to remain glued watching this thing. Hope everyone's doing well. James says, "Hey Cred, looking forward to another entertaining session." Entertaining session? I think our friend James might be lost. Not sure how much of the entertainment we do here, but I'm grateful that you're here, of course. Fellow Ponzi enthusiasts, definitely feels more like it day after day. Patience is key here, says Peter. Don't make any impulsive moves. I mean, it'd help if the market made an impulsive move, put us out of our misery, but as for trading, yes, I agree. I assume the audio and video stuff is working. If not, I'm sure you'll have let me know, but it seems to be all in order. Swearing, basically? Okay. AV is perfect, nice. Thank you, Richard. And Middler Diddler, an amazing name. Yeah, we got some headlines to go over for sure. Is you buying my liquidation this time, sir? not here. Maybe a bit lower. Okay, first things first. Like the video, subscribe to the channel. Let's grow and have fun together, staying poor. Second of all, thank you to Blockfolio. Shout out to them, the sponsor of Technical Roundup. I'm sure you've seen them everywhere, not least the fight, or so-called fight yesterday, between Logan Paul and Floyd Mayweather. But that's Blockfolio, mobile trading app for your trading needs, portfolio tracking needs. Spot, very easy to hedge on there, oddly enough. Hedge your spots at least. One-click asset swap into USD and other currencies. Be sure to check them out. I was actually considering buying some more shitcoins for my family members, just to like bring down the average a little bit, because I more or less bought the top of, as I said, Solana, ETH, and FTT for my siblings. So maybe I want to average those down, just to make things look a bit better. And I'll be using Blockfolio for that for sure. As usual, when a pool fights market dumps, yeah, definitely a good indicator. Send it to zero with haste, says Dixie Enormous. Interesting. I didn't think about Luna. I think when the market looks like this, it's not really the best time to think about fundamentals for this market. Because as we know, when shit takes a nuke, no project is safe, and the correlations come in and become super tight, for the most part, right? So you need to make an even bigger bet on a less probable outcome. That not only is stuff going to go up from here, but your specific altcoin has reason to outperform. So I like being long altcoins when the market's bullish, specifically when Bitcoin looks good at least. It can move sideways, but in the context of being looking constructive and looking bullish, right? But if I'm not sure about the whole market, I'm going to be very careful with altcoin allocations. And as we have discussed and will discuss, out of stuff to press the green button on, ETH still looks like the superior option if you're going to jam longs into anything more so than random altcoins. And even then, I don't have ETH long scenarios right now. So it's not really the best window to look at fundamentals, in my opinion, but certainly we have more time than before to actually look into projects. I just mean in terms of asset allocation. Okay, so I want to actually bring back a bit of the Monday format where we'd go over some headlines, some news, and have a chat about them. I'm not some super qualified economist fundamentals guy, but I'm also not a complete driveling idiot. And nowadays on the crypto YouTube side of things, that seems to be ample qualification to talk about these things. So, not being a total idiot puts me in the top 1%, obviously, when it comes to discussing these things. I've got a bunch of random stuff here. I'm sure more has happened since I made this short list. But let's have a quick chat, and then we'll talk about markets, although, if you look at last live stream's price action, it may be essentially indistinguishable from what we've got here. So gonna take it a bit light on the conclusions. So, in no particular order, Justin, Trump says Bitcoin is a scam, competing against the dollar. I think this is quite a popular view amidst some US politicians. And this is one of those bell curve memes, actually, where on the 50 IQ side and on the 150 IQ side, you say that at least this bit about competing against the US dollar, that's an opinion that's held by like really clever people and really thick people. So it's either those who've really considered the evidence and looked at flows in terms of mining equipment and whatever, mining monopolies, and generally the outflow of USD to BTC and who benefits from that. So that's like the 150 IQ take on the competing against the dollar, plus all the libertarian, sovereign citizen, cringe, whatever stuff. So that's on that end of the spectrum. And then you've got the 50 IQ, who just think, Bitcoin scam, dollar eternal good, and therefore Bitcoin bad. So this is just like, obviously, if this were the current president making that statement, the market would care a lot more. But I just thought it's an interesting contrast. When it comes to looking at Bitcoin through this lens, it's either really thick people think that way, or like people who with quite considered opinions. And there are reasons to believe that this competing against the US dollar narrative is going to and has been picking up steam. The duck just linked me this, but it's not working. Hold on, might work now. Ah, interesting. Yeah, so we'll talk about the El Salvador news. It looks like Tron is establishing an office there. That's interesting. We've got like a laserized head of state now. I'm not worried at all. Trust me. But yeah, just some stuff about, Bitcoin is a scam. Public perception is going to, as the price goes up, the fundamentals improve. And as the price goes down, the fundamentals become worse. It is what it is, right? It's just interesting to see the former president's commentary on that. Now, it's been no quiet or slow day for headlines. One of the, we've been battling many narratives recently with Bitcoin. Very few of them have been positive. And if they have been, the market doesn't really seem to care. So we've had the energy stuff, we've had ESG, regulatory, usual China ban, whatever. And now we've also got the whole crypto should be banned because it's used in cyber attacks and cyber, where is it? Where's this exact headline? Yeah, ransom payments. There we go. So these ransom attacks, the argument is they often ask for the ransom to be paid in Bitcoin, therefore Bitcoin is bad. And I've literally seen arguments and articles suggesting that all of cryptocurrency should be banned because it's the most popular payment method for these ransom attacks, which is pretty ridiculous. I think there was another headline here to suggest, there's the whole pipeline thing, and it looks like the US government was able to recover some of the Bitcoin, 63.7 out of 75 paid in ransom. No idea how they did that. That'd be a pretty interesting one to read. Yeah, they recovered the ransom payment, as Blaze says. Yeah, for sure. That's from 3 minutes ago. There was another one, something about Mr. Biden wanting to speak on this topic. Not sure where that was. Yeah, Biden to discuss cryptocurrency role in cyber attacks. Market took a bit of a dip when this happened. It's not entirely clear what it means just to discuss cryptocurrency role, whether that's a precursor for regulation or not. But it's just another one of those things putting some pressure, at least in a short-term market sense. All these recent narratives just haven't been positive. And this seems to be another one that's picking up a bit of steam, especially if the incumbent president wants to speak about crypto, cyber attack, regulation. It's heavy. It's a bit of a pain in the ass. That said, using Bitcoin for cyber, for ransom payments is always doesn't make a ton of sense in my mind. It's literally a public open ledger, right? If you're going to use a crypto to pay for these things, use a privacy coin or something. It's just why would you use Bitcoin? doesn't make any sense. But still, same old point that it seems we've got more regulatory, at the very least, like regulatory overhang above our heads to look out for. And we don't seem entirely clear or out of the woods on that one. So something else to bear in mind. Good old martingale from Sailor. So MicroStrategy announces a proposed private offering of 400 million. Again, wanting to raise money to essentially spend all of it on buying Bitcoin. I'm keen to see whether this offering becomes fully subscribed. It probably will be, but there's some chance that it won't. And if it's not, that'll be an indicator of market appetite for further risk. And Sailor's average is just going to be really, really crappy at this point. Like at one point, he had an average of like 12k or something, and then he just kept adding with huge size as the market was going up. Kind of this really extreme form of compounding. And so if this isn't the bottom, and he raises this 400 million and buys whatever in the 30s, and then the 30s breaks down, that'll be quite a hideous set of circumstances. So I'm gonna watch. What I'm watching with this is how much of this does he actually raise? Will the 400 million be fully subscribed? And also the subsequent outcome of his purchase, because he normally doesn't wait around. As soon as the money's raised, he just yeets it on Coinbase, and that's it, right? The allocation is complete. So you can imagine he's raising his average, buying a lot, and then if the market, let's say, breaks 30k and we have a volatility expansion against him, that'll obviously be pretty rough. And as someone mentioned in the chat, MicroStrategy is existing approximately 90. They've got 92k Bitcoin, which is a lot of Bitcoin. So yeah, Sailor going all in. You got to respect the conviction to some extent. He's literally just all in this bet on Bitcoin, just raising debt, buying Bitcoin, raising debt, buying Bitcoin. It's quite impressive. But he either comes out a hero or he just gets liquidated. I don't really think there's a middle ground where he like scales out or takes profit or like takes out his initial. I really don't think that's one of the more likely outcomes. It's do or die, moon or bust, in my opinion. So keen to see how this turns out. And I'm sure you've seen the duck continuously tweet the MicroStrategy chart, which is always fun to observe as well. Yeah, I agree. He's a degen trader, basically, as Rookie Osiris says. And also, like, if you look at this chart, right? Like, look at this price action. Forgetting everything, if I were to just highlight, let's say this happened today, right? The 7th. So it's essentially like this block of price action. It's like, show me here where the market reacted well to more or less what's likely to be a $400 million purchase. It's like it never happened. We're literally, even within this box they arbitrarily draw out, we're back at the mean, and any pumps have been fully retraced, and even like a short-term break in structure on the lower time frame. It's rough, right? As we've discussed countless times, even just like on the way up before the direct listing, even if you're not a technical trader, one thing you want to see if the market is strong is a positive reaction to anything that looks like good news, and bad news being shrugged off, absorbed, used as dips, you know, gifts during dips type of thing, whatever. Like, I remember, I think on the way up, like, Binance got hacked and the whole BitMEX indictment thing. Like, I don't have the exact timeline neatly in my head, but we had some pretty ugly stuff come out on the way up during the bull market. And if you look at any chart, those events they're not even discernible. They're not visible because of how aggressively they were bought up. Whereas recently, we've had like a ton of good news within this consolidation, and you can never tell because that news is not having a material impact. Whereas as soon as we get any type of negative headline, even if it's Weibo banning influencers from social media, the market just retraces its entire rally. So that's not the type of behavior you want to see, right? If you want to be bullish, you want good news to do good, bad news to get eaten up. Right now, you have good news being fully retraced, and anything that even looks remotely like bad news just gets dumped on or dumped into. So you want to see a shift in that behavior, even if you're a non-technical trader, to get a sense that tides are shifting. And there's no compelling evidence of that at the moment, at least. So that's our MicroStrategy chat. This is an interesting one. Same thing, right? Like, fundamentally, this is like good / interesting news. So you've got a nation state, yes, not the most glamorous country in the world, sure, but you've got to start somewhere. It's not like the United States or some European country was going to lead a move like this. You've got to start somewhere and then hope that there's like a domino effect. Or enough time passes that the pilot program of sorts is successful and then neighboring countries adopt it and then that has a knock-on effect. You can't really expect the start at the top. So I'm not as concerned that, you know, it's El Salvador and its GDP is this, that, etc. I don't think that matters too much. It's more the general precedent that it sets that's interesting. Again, there are human rights and authoritarianism concerns. Oh, come on. With El Salvador specifically. But it's generally quite well equipped to run a test like this because, again, they use USD. There's a big problem with remittances. So, you know, if anywhere this kind of pilot program is going to succeed, then this is like a decent place to run that first experiment, right? So we'll see what happens. There's a lot of like misunderstanding about what it means for something to be legal tender, and it does vary from jurisdiction to jurisdiction. So they'll have their own sets of laws which define what legal tender is and the certain rights and requirements that come with that. Generally speaking, legal tender does not mean that merchants have to accept that legal tender everywhere. Generally, it just means it's a legally recognized way to extinguish or settle outstanding debts. There's kind of a legal system recognition thing. More so than, well, now every coffee shop has to accept Bitcoin because it's legal tender. It's not how it works, right? I know Coin Center is currently still working on a piece as to what this means for El Salvador and neighboring countries and maybe even the US. Like, does it mean because it's legal tender that other countries have to see it as like a currency? What are the implications? There are a few bits and pieces going on. So it's interesting news. I think it's a good place to have that program and to try out Strike and see whether it's going to be used for remittances and so on. But again, in terms of short-term price action, it's like, okay, arguably some pretty good news. Like, you can imagine if we're in the market, like if we're in this stage of the market, right, when we were like straight up only, if that news came out on this left side of the screen, we'd probably be up like 10-20%, right? Maybe not 20%, but like probably close to double digits on news like that. Instead, again, I implore you, you look at this chart, tell me if you didn't know or don't know where this news came out. It doesn't stand out, right? You can't point it out because the market didn't care. You had a bit of a slight green candle into it, then the market just sold into this news. It's irrelevant. I think it was yesterday, so June 6th, right? It's the same thing. It's like within this box, where is, you know, can you see, or is there really obvious evidence of this big headline hitting the market and seeing a positive response? No, like it doesn't matter. Nobody cared. And that sucks. The bots don't care. Yes. Agreed. So yeah, fundamentally interesting. Will it set a precedent, set off some dominoes, get neighbors interested, have some interesting implications and so on and so forth? All very cool. Short term, market doesn't care. Whatever. Right? What else we got? More central bank, CBDC, stablecoin stuff. This is like slightly more, I mean, I'm going to say bearish, at least in terms of like, it's not just a neutral central bank saying, yeah, digital currencies are cool, maybe we'll do our own. In this case, it's the Bank of England taking a slightly stricter view on stablecoins, specifically saying that, where is it? It's a bit about them having to be regulated just like, here we go, just like bank deposits. Stablecoins used as money should meet equivalent standards as those provided by commercial bank money, otherwise known as bank deposits, which means that stablecoin issuers would need to meet capital and liquidity rules and offer deposit insurance. My understanding is most of the major stablecoin issuers, so like Tether, Circle with USDC, etc., I imagine, this is just me speculating, they would fall short of these transparency and liquidity rules and insurance requirements that may become applicable to stablecoins as a whole. So Bank of England is among major central banks across the world revving up work on issuing digital cash. Yes, we've discussed this a million times on stream about central bank digital currencies. I'm personally not hugely interested for the time being. I feel like a lot of central banks are just talking about CBDCs, kind of staying relevant, staying topical. It's like a big thing. It's endless consultations and pilot programs and whatever, but nothing of substance yet. And again, I don't really see central bank digital currencies as competitors to at least Bitcoin and Ethereum. To stablecoins, yes, but not to Bitcoin and Ethereum. So slightly different angle there. And as you can expect, the two obviously work in tandem. You know, central banks come out with their own digital currencies, plus at the same time regulate and raise the compliance requirements for non-central bank digital stablecoins, obviously putting themselves in a favorable position with regard to the regulatory scope, right? So yeah, this came up on my radar. It's my speculation that most of these issuers of stablecoins don't meet bank deposit compliance requirements. So if that were to become a thing, might be a bit shitty. And obviously, as we know, especially in the last like 2-3 years, stablecoins are like the backbone of crypto in many cases, both for futures, for DeFi, and just for trading. They're everywhere. Crypto is kind of built on stablecoins. So any quote unquote stablecoin FUD would be kind of shitty. I don't think there's anything else that caught my eye here. Yeah, okay. Just bearing in mind there. This is a really interesting one. Rougher Investments, UK-based one of the corporate treasury purchasers of Bitcoin. They either sold everything or they sold like a big chunk. Let me see. Sold its Bitcoin because da-da-da. Yeah, okay, fine. Okay, so they do have some Bitcoin left. But anyway, this shows an interesting point that these big institutional allocators, many of them won't just be buying Bitcoin, putting it in their treasury, and deciding to hold it forever, right? For many of these, they're going to trade this thing, especially if volatility is really favorable. Like if you're managing billions and you buy something and it like triples in a couple of months or weeks, you'd have to come up with a really creative argument to not take any profit on that position. We saw even Tesla take some profit and trade their way in and out of it. So it comes as no surprise that Ruffer, and I imagine many others, are and will be doing the same. Especially because, 2.5 of a 27 billion portfolio, that even as a percentage, that's no small amount to deal with. So I think expecting like an infinite bid purely based on institutional allocators buying and never selling is naive to some extent, or at least the evidence doesn't seem to bear that out. And I think as long as volatility persists, we can expect more of these allocators who bought on the way up to trade around and manage their positions if they haven't already, right? Which is an important consideration when it comes to, where's the selling coming from in the market. And yeah, last one. We kind of discussed this. They've recovered some of the Bitcoin, but just bear in mind that this crypto equals ransomware payment medium of choice narrative doesn't seem to be going anywhere, or doesn't appear to be disappearing. There we go, English. Amongst the whole Bitcoin energy, Bitcoin ESG, all of those very lovely and positive narratives, it seems like the ransomware one has some staying power. And we talked earlier how President Biden is going to have a chat about those things as well. Especially when you get, this isn't like a private company. We're talking like federal officials, pipelines, really sensitive infrastructure, which they're probably not going to take too lightly. So we'll see if that turns into another FUD narrative that nukes us. Hopefully not, but the way things are going, the chips haven't been exactly falling in our favor for the time being. I think that's all I wanted to talk about on the news side so far. Are there any questions? I mean, was that helpful? Do you want to do more of these every Monday? I know we took a break, but when there's fun stuff to talk about, it can be quite helpful to just have a chat and see what's up. Let me know, of course. What to do in the bear market? Build stuff, learn to trade, get a life, get a network to thrive with in the bull market, etc., etc. Kirk says, as investor versus trader, El Salvador news seems really long-term bullish. I mean, yeah, sure. This explicit recognition of Bitcoin and proposing to use it as legal tender is certainly a really, really cool precedent. I don't want to understate that. And again, I think people criticizing the news just because it's El Salvador, I'm not sure that's entirely fair. You've got to start somewhere, right? You can't expect it to start with like in Europe or North America, whatever. You've got to start somewhere, and then the real test is whether A, the program is successful, and B, it has a knock-on effect into neighboring countries or developing economies, whatever. I think that's the real test. The fact that it's El Salvador and you wouldn't want to live there yourself probably is okay. That's kind of secondary, in my opinion. Would institutions rebuy at 60k? I mean, well, the price is currently at 35k, so I would hope that they're not rebuying at 60k. Do you think Don will keep being able to post crabs for a while yet? It seems to be the case. Stop wasting my time and get on with it, mate, lol. I don't know what exactly I'm supposed to be getting on with, but I'm sorry you feel that way. El Salvador, will the bill actually get passed? Yes, because the president's proposing it and he has like an effective majority over the legislature. I mean, he kind of nuked the whole separation of powers thing, so that's helpful for him. Cred, what do you think is the worst case scenario for El Salvador? Yeah, that's a really good question. I don't know, maybe they just say, yeah, Bitcoin is shit for remittances, it doesn't work, Lightning Network doesn't work. This is like a CIA plot to take our money or something. Maybe, I don't know. I don't know about the worst case, but the bearish case is quite simply that the program fails and it gets no adoption, and it's legal tender but nobody uses it for anything. That's probably the bearish case. I didn't go to Miami, so I don't have to self-isolate anywhere. Didn't El Salvador's president march armed soldiers into his parliament to get a bill passed? Something like that. Yeah. Why not just use stablecoins? Why Bitcoin? Yeah, I kind of understand that. Like, if we're talking just pure remittances, having like a stablecoin on Tron or something, another really cheap blockchain, makes a lot of sense. So I don't know. I think it's because Strike, what the open source software they're using for it is built on Bitcoin and built on the Lightning Network. So I assume that's it. But in theory, yeah, some stablecoin on a low-fee blockchain makes at least as much sense. Legal tender means you have to accept it as payment. No, it fucking doesn't. It doesn't. Certainly not in most jurisdictions. Legal tender means it's a legally recognized currency or medium through which you can settle debts. It has nothing, or very rarely has a lot to do with accepting XYZ as payment. Certainly not on a whatever commercial merchant level. Okay, that's kind of all I've got. The feedback was generally positive, so thanks. That's always cool. I'll happily do more of these every Monday. Last week was a bit of a slow news week and slow market week, but we've had a few things to chat about, and I'm always happy to give my qualified opinion, totally qualified opinion. Cred, charts please. It's 1 a.m. in India. Okay, I'm sorry. Thanks for staying up. Okay. So, monthly time frame, quite simple. We don't look at it. We don't talk about it. It doesn't exist. Simple. Sorry, I'm just keeping up with chat. Is it possible that this could be a way to get around US sanctions for El Salvador? Don't think so. Don't think that's the point. I think it's more of a remittance-based focus. Yeah, okay, so weekly time frame. I think there are 2 points you can make for like max bullish copium. The first is based around necessity, which is essentially, if the market doesn't bounce here, we're all going to die, right? Again, the only exception would be some sort of mega capitulation into a mega spring that gets reclaimed, and then you think, oh my god, who was buying this? And then, we mega moon. That would be awesome. But purely structurally speaking, if this isn't the bottom, then we die probably towards the old all-time high area at 20k. So if there's ever a reason to be bullish, it's because if you're not bullish here, then, where else are you going to be bullish? It's like the only support we have left on the weekly time frame. So that's the first thing. The second point of bullish copium is that the past couple of weekly candles have been compared to the price action that followed the March crash of last year. So specifically, the pattern that's being pointed out is that you've got a level of resistance, right? The market retests it, closes below. Then the next week also retests it, closes below. But in doing so, as you get those successive, is that a word? Successive. I think so. Successive? Let me Google it, one sec. Yes, it's a word, successive. As you get these like successive retests of resistance, and although you're getting closes below resistance, the market just keeps crawling higher, right? So low, close higher than the week before it. So essentially you have bearish retests which don't lead to anything. That's kind of the bullish comparison being made to the price action following the March crash. We had the same thing more or less here. Again, the whole context is different, blah, 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 whatever. We're just talking about price structure, and we're trying to cope, okay? We're coping here. So you have a level of resistance, and this is the kind of price behavior that a lot of people are using for an analogy. Same thing, you've got a breakdown through range high, and then whatever. Retest of resistance, closes below it. Okay, technically a bearish retest. Then you have the same thing. Retest of resistance, closes below it, but higher than the previous retest. And then eventually you can just see what happened. Price went from testing the level and then closing far away from it, eventually through. And in that case, at the very least, we'd expect a retest of prior structure at 45 to 50k. So that's kind of the best bullish copium I can come up with. Bullish copium number one. This is kind of the only weekly support we have. If this doesn't do it, then we take even bigger haircuts. Weekly copium number two is that if we keep getting these bearish retests without price breaking the lows, there's a decent chance that it comes into this level for the fourth or fifth time and you get a bit of a squeeze higher. That's your bullish copium for the time being. Also, I don't have any dropped frames, so it looks like it's a YouTube problem. Just refresh the stream, it should be okay. Is it okay now? Let me know. Sorry about that, technical issues. I sold the bottom of the stream. Okay. Yeah, you didn't miss anything. I just said if we're going to be doing bullish copium, it's A, that this is the only support we have. If it's fucked, we're fucked. And the second point was, if the fractal that we use for a point of comparison from the March crash has any validity, you would expect the market to creep up into 38 level and then pop through it for on the fourth or fifth attempt. That's kind of the only thing. People saying bad internet at your mum's place. I really hate these assumptions about my mum's place. The internet here is brilliant. Okay. In terms of weekly closes, nothing really to add. We're still within the same boundaries as before. We have the range high resistance, 3840k, range low support, 32k, and price is literally diddling in the middle. And also, to add to that, we have 2 inside weeks in a row. So we had the weekly close. That was an inside week. And then the weekly close before it was technically an inside week as well. And that's where you get, Bollinger Bands getting tight and all this low volatility, drawing the triangle type of stuff, big move incoming, whatever you want to call it. We are definitely coiling, and that doesn't last forever. But yeah, you can even see, like, if you just look at the chart, forget the levels, right? Just kind of eye test. Where is stuff? There's stuff here, and there's stuff here. There's no stuff here. Therefore, it's a shit place for me to trade. That's literally it. Do I believe in triangles? I mean, triangles exist for sure. So even looking at market structure, same thing, right? High, low, lower high, lower low, lower high, higher low. It's chop. It's chop. It's trendless chop. 2 inside weeks in a row. Volatility really falling off. Market structure isn't giving any hints. If we're looking at hints from other things, like how the market's responding to news, it just hasn't been positive. We've had the El Salvador stuff. We've had 400 million sailor. We don't seem to care. So I'm not going to care either until the market does, type of thing. Yeah, there was a question from Edward about what do you think happens to DeFi yields if we get into a protracted bear market. I mean, DeFi is super reflexive, right? If ETH price goes down, the amount of demand to borrow and be long the market generally, if crypto enters a bear market, goes down. TVL goes down. Yields go down. It's not a... like, a lot of DeFi is a product and is there to facilitate speculation. If speculators are wrecked / dead, then that will be inevitably reflected in the rates that are available via DeFi. So those high rates and yields that we're used to are a product and a reflection of speculation and the demand to borrow. If speculators are dead, that demand drops and has a knock-on effect on just about everything, especially yields and TVL and all that type of stuff. How much money have you lost so far, Cred? None, believe it or not. None. My portfolio set an all-time high on the day of the nuke, so I've been very pleased. You still in USDT? No, I'm in USDC. Will be glad with my 0.3% APY in Yearn. Yeah, I'm sure. So yeah, I don't have a ton to add to this, really. I'd love to sit here and make stuff up and entertain you, but I don't have a setup that's close to triggering, and nothing really stands out to me as, even on intraday timeframes, I've had a couple of chats in previous live streams about positive developments or just market structure, whatever. There's nothing like it for me at the moment. One thing I'll always do is my best to avoid insulting your intelligence by just making stuff up or sharing stuff that I don't find persuasive. In this case, I find nothing persuasive here. And you can see just from eyeballing the chart, price is some way away from my levels. Any day trading or scalping opportunities? I mean, even the day trading stuff, I try to keep them somewhat anchored to higher time frame levels. And currently the market is some way away from those. I mean, I'll day trade if I have a setup to day trade. If price is trading at areas where I think I can get a good reaction, then I'll trade them. This just isn't one of them. Am I buying the next support? In theory, yeah. In theory, yes. Which for me is 30k. Right? The range low. And as we've discussed before, it's not uncommon for price to wick into an area and then eventually come down and give you a more complete candle body type of retest. So I'm open. I'm not with a limit order. Last time I was buying the nuke, at least on ETH, with a limit order and Bitcoin just market matching at the lows. I probably won't limit buy these levels, but in terms of directional bias, I'm definitely open-minded towards playing a bounce from 30k into whatever. So for example, a kind of textbook idea would be, let's just take this lowest close level, market nukes, catch a bounce from A into B, and then get out. That would be like plenty for me, for example. I'd probably even use spot for a trade like that. And again, it's the same thing. The A, this is still high time frame support, and there's this argument that we've wicked into it, but we haven't had like a full retest. But also, in terms of like directional bias, I know that if the long at 30k fails, then we're probably in a lot of trouble. So I really like trading around do or die type of spots. The balance of evidence and experience suggests that my regrets come from not trading those levels more so than trading them and getting stopped out. So I'm very open-minded towards punting support if it gets there, but just probably not with a limit order. And again, bear in mind, it's entirely reasonable for, I think this is what the Duck was alluding to on Twitter, for price to really nuke and overextend through these levels and then give you some sort of reclaim. And so then the trade wouldn't be into the nuke, but would actually be after the nuke once you've got your risk defined for you. But structurally, either way, yeah, I do have my eye on at least playing a bounce from support into the nearest resistance if that becomes available. I just don't know if it will. Do you use stop losses for spot? No. Can I trade ETH levels when Bitcoin is range bound? For sure, yes. I do look at alt BTC charts. When you are trading in the do or die area, do you try to catch the knife or buy strength from the lows? Almost always catch the knife. At least for me. How do you play reclaim? Do you look for closes in the 1 hour, 4 hour? It depends on the time frame of the structure. So if it's a daily structure, I'm not going to take an hourly, going to interpret hourly candlesticks as being reclaims. It's a bit too low time frame. Why not stop losses for spot? It's because you're normally near a PC. Yeah, that's kind of most of it. So yeah, that's Bitcoin. I'm really struggling to come up with much else. I mean, I don't envy anyone having to trade this right now. We've discussed the case for copium. We've discussed the impact that headlines are having, generally not that great on balance. And in terms of trade ideas, the only real thing on my radar is buying a nuke into support, if appropriate, not with a limit order, and then playing that as a bounce into prior structure. I'm not too keen on like selling resistance either. If I had spot exposure, then I would be definitely open-minded on a rally into this 38-40 region. But because I'm not exposed directionally, I'm not as keen to manage my downside or as aggressive. Yeah, that's Bitcoin. Not going to make stuff up. ETH, I don't have a particularly clear read. As we discussed last Monday, I was open-minded towards playing a reclaim of this cluster into the breakout level, but then that just got chopped, which is quite rare, bear in mind, because again, as we discussed, once you get one fake out, the second fake out is less likely. In this case, that's kind of exactly what happened. I mean, arguably this is like local support, but whatever. That the clear idea has more or less evaporated for me, so I have no setup to do business at these range highs. From a market structure point of view, it arguably looks slightly better than Bitcoin because the higher lows are a bit more obvious, but it's not the case where, for example, if the market started to pull back for the monthly open, then I'd be looking to buy a dip into this region. That's not a setup that I would take. For ETH, it's very much the same as Bitcoin. You more or less have a line in the sand at 1800 to 1900, and then if that fails, we go to 2017 levels, so 1400. So that's the clearest way to depict that, is the following. This is the way it bounced, right? Top of the range, highest close, whatever, in the 2K region. That's our line in the sand. If that's not good enough, then we probably trade. I mean, like, even 1400, I don't feel super comfortable saying that, because structurally, that's just here. That's not that far away. What I always preach is that if you've got, like, a level here, and you say that it's, like, A++, it's generally inconsistent to then have another level quite close by, and to say, yeah, well, if A++ breaks, I'll buy B. Because if this level that you've identified is so important, if it breaks, you expect a big move, not a small move towards the next level. Does that make sense? It's kind of just like 6K, right? Like 6K Bitcoin was a massive level. And if you subscribe to the idea that 6K is like super important and if it breaks, we're all fucked, then does it make sense to then say, well, yeah, but then I've got support at 5.5K? Those things to me are somewhat inconsistent, right? If you're arguing that 6K is mega level, then almost by definition, this 5.8, 5.5K can't be a support level, because the move from the 6K break, if you've correctly identified it as a mega level, should take it way past anything close. Does that make sense, logically? So in the same vein, I don't feel entirely comfortable saying, well, if 2K breaks, that'll be really bad, but then we've got support at 1400. I mean, yeah, percentage-wise, there's a bit of space there, right? It's like 25%, 28%, but structurally, I'm not that comfortable. But I still think it's a useful level to look at. So just to summarize my views on ETH, I don't have anything useful to say where the market is now. I've got daily resistance and the real test for price at around 32, 3400 if it wants to creep that high. Otherwise, from a level to level, whatever range trading point of view, range high support at 2K, range low support at 1400. And again, just like any other TA stuff, what do we know? If the market breaks out of a range, finds support, but then trades back within the range, you generally target the range low. So that's kind of your level to level type of thing. 2K is support until proven otherwise. If it fails, I'm looking at 1400. If that fails, let's just not go there. And yeah, like the video if you like the video, I guess. When BTC absolutely nukes falling knife style, do you ever buy strong alts like Link or ETH to try to outperform? In theory, yes. In practice, no. I'll just stick to buying Bitcoin and ETH. So what Nick is getting at there is altcoins are essentially levered Bitcoin or beta to Bitcoin. So generally speaking, if the market nukes, altcoins will nuke further. And then if the market then bounces, altcoins will also bounce harder. So the argument is, if you're knife catching on Bitcoin, or you believe that the drop has reached some support structure where you're going to get some mean reversion or a bounce, the argument is, if you want to take advantage of this levered Bitcoin, then instead of buying Bitcoin at support for like a 3, 5, 10% move, you buy altcoins for a 10, 15, 20% move. So that's what a lot of people do. And they'll even look at which altcoins are strongest when the market is dumping, so that they're either green on the day or down less than the other altcoins. And then when they believe that the market, Bitcoin specifically, has hit support and we're due a relief bounce, they'll buy those strong altcoins in anticipation that the bounce will be bigger than the bounce offered by Bitcoin. That's a totally reasonable and popular strategy. I'm just shit at trading altcoins. So in those cases, I just buy Bitcoin and ETH, which are my bread and butter. The only thing I'll say on ETH is that it's a similar type of structure with 2 inside weeks in a row. You've got a build-up of highs just under 3k. It wouldn't surprise me to see a pop through that level. Even if that breakout gets faded, and that would be a decent setup, like an extension through those highs, which then gets sold off. That's probably decent, but that's just something on my radar, is a build-up of highs based on previous week's tops. Kind of expecting price to trade through them, raid them, whatever you want to call it. If we just add that in red, you can kind of see what I'm talking about with a kind of build up there. Right? You can kind of see what I'm getting at. Bunch of highs built up here. So it wouldn't be altogether surprising to see a run into the 3k level. But that's honestly kind of it. No strong views. Would you say you trading outperforms the market during bull market trading, or just holding a blue chip can be just as profitable? It depends on you. I know some people definitely like overtrade and outtrade themselves from good positions when the market's bullish, when they should just be holding spot. If the market's bullish, I kind of do both, which means all of my collateral will be in spot. Sometimes, or usually even in like FTT or something, if I'm bullish Bitcoin. And then I'll try to trade on the long side as well. But generally speaking, yeah, if the market's bullish and you've got spot exposure, you're ticking most boxes at that point. Also, it's very weird to keep asking me about other traders. This isn't like Sex and the City or Desperate Housewives. It's not some celebrity contest. What do you think of XYZ trader? Let's just chill out and talk about the market. Any trades while we wait for Bitcoin and ETH to reach support or break resistance? I mean, not for me, honestly, man. Not for me. I'm sure there's some altcoin stuff going on, like like lower time frame rotations, whatever, that are reasonable, but nothing really on my radar. Solana is the outlier, of course, but even that, from a risk reward point of view, if you're just joining this rally as it retests its previous top structure, that's probably not the best place to do business. So I feel like most of this move, at least the easy part of this move, is done. What do I think of Miley Cyrus? Yeah. Cred, what do you think about adding to a trade to lower entry to be able to get out even? Losers average losers. That's my answer. What else have I got? I'm still watching the ETH BTC weekly range. Untested range high at 84s. Maybe if we get the ETH poke into 3k above all those highs and ETH BTC hits this weekly resistance, that might be a confluent setup there. I would be really surprised if this range high gets broken on a weekly basis on the first attempt. That would probably be a decent bull market. I don't want to use that kind of strong language. Anyway, it would be like, I'd be surprised at how bullish the market is if this level gets broken on a weekly basis immediately. And certainly if it like just starts flying through it. Because generally, ETH BTC does well when the market is bullish. And also, even if the market's not bullish but bouncing, recently ETH has been outperforming Bitcoin. So if you are in an environment of kind of green candles, be it on a trend basis or even on like a nuke but bounce basis, ETH has been the trade to take, which is why I started the stream by saying that if I want to be jamming the green button, it's probably via ETH. Like ETH is the preferred instrument for that, and ETH BTC chart is supportive of that premise, right? But still, these weekly levels are behaving really nicely. Support, reclaimed, perfect wick, and then you've got this untested resistance overhead. I expect some de-risking to take place if ETH pops up into 3k plus and ETH BTC hits weekly resistance. Might see some rotation in the market. And as we've discussed, as much as I would prefer a really strong decoupling, decorrelation, or dispersion, whatever narrative, the best time to trade that is when the market's bullish. So Bitcoin's going up, but this other stuff is going up more. That's when you make the most money on trading the loosening, so to speak, correlations. As we learned on this move here, Bitcoin went sideways at 50k, while ETH like doubled, and then it just came crashing down within a couple of candlesticks, right? So if Bitcoin isn't there as the tailwind to support a bullish altcoin market, the current evidence suggests that it's just not, it has no sustain, right? It can't be sustained. It'll just get swatted down, mean revert, whatever, give it all back sooner rather than later. So if you want to be long-term, at least with what we have to work with right now, it seems like if you want to be bullish ETH, you still want Bitcoin to be risk on, and that's the best environment to be bullish ETH. I don't know if that makes sense. I mean, let me know, obviously. How do you think alts will decouple from Bitcoin price action? I don't currently see good evidence to support a decoupling thesis. For now, it seems like crypto is kind of too small, or at the very least, the way these allocators, funds, whatever, are positioned, it still seems to be the case that collateral is just collateral. And there's no great evidence of like long-term secular trends in Ethereum which aren't in line with Bitcoin. If that evidence emerges, awesome. If anything, the market action when this happened, like this entire run up, was Bitcoin going without Ethereum going without Bitcoin, and then within a week it gave back that entire decoupling. Like the entire decoupling was taken out by this weekly candle, you know? So again, I want to see evidence of a decoupling. It's just not there yet, in my opinion. And think about the participants who got wrecked the most in this market. It's essentially those who ignored Bitcoin while it was looking like shit in the 50Ks, decided to move everything to altcoins. I mean, ETH did better, but especially like whatever, get long crypto without having Bitcoin support. They're the ones who got wrecked the most on this drop. You have to realize some of these altcoins went down like 60, 70%. I mean, even ETH went down like whatever, 60 something percent. So the participants caught most with their pants down were those who ignored the lack of follow through with Bitcoin as the rest of the market was going. So I'm not comfortable being risk on crypto if Bitcoin isn't there to join the party. I'd love to live in that world, but it doesn't seem like it's there for the time being. Do you pay any mind to the dollar index and legacy markets? In my overview, I do. I'll keep an eye on Tesla, gold against Bitcoin, and the S&P. The S&P specifically, it's mostly just been tracking the downside correlations. So like S&P nuking, if our market is weak, as we've learned, it'll take any excuse to take a shit as well. And at some points, that excuse has been the S&P is going down, so we're going down as well. But very loosely, I don't have like a system based around what the legacy market is doing. Basically, Bitcoin is still king. I mean, that seems to be the case, right? That Bitcoin is still king. Or at the very least, the scope for altcoin or non-Bitcoin outperformance without Bitcoin looking strong as well still seems to be very risky / limited. So can you moon Ethereum and altcoins without Bitcoin as a tailwind? Yes. Is that an easy long that has a lot of longevity? Doesn't seem that way. Seems risky. And I was tweeting that at the time that, you know, being long crypto while Bitcoin looks like shit is trading on borrowed time, in my opinion. And the market is bearing that out for the time being. I've got a fib video on my channel. It's kind of shit. I'd recommend the study guide has a section on fibs that's way better than the video. Cred, I read you suggested knowing our place in the risk curve. A small portfolio maybe doesn't need to stick to the 1 to 3% rule. Can you please elaborate a bit more on that? I mean, yeah. So risk management is often a product of where someone is on the risk curve. So if you've got like whatever 7-8 figure trading account, you're probably mostly sticking to liquid spot trading, futures, whatever. You're not going to just yeet several like percentage points of your account into super speculative farms or low caps or whatever, right? And a lot of the time you have an impact in the market if you're trading a bigger size. And if you want to get some decent risk on relative to your account size, it just means trading a lot of instruments is impractical. So if you're trading with like a few thousand, for example, you know, what's good risk management trading with, say, a couple of thousand, and you're risking 1 to 2% on futures and trying to get like 2 to 1 risk reward? It's just not the way to trade crypto. If you're trading with a smaller account, you need like, look, listen, I'll keep it very colloquial. If I were trading crypto or entering crypto with like a few grand, I would not even look at futures. I would be like balls deep into BSC, shitcoins, low caps, scams, you know, all of that type of stuff. You've got no business risking like $200 on a BTC perp trade trying to make like $300. It just doesn't make any sense. So where you invest and what you trade has to have some sort of relationship with what size account are you trading and how quickly can you make it back, right? Let me open a window. It's fucking hot in here. I mean, people disagree, but it's like, look, I get these DMs all the time that, I made like, you know, a couple $100 and I'm risking like 1% of my $2,000 account for futures, etc. Like, yeah, okay, that's cool, but it's not really a productive use of your time. Like there's no real, you probably don't have an edge, and there's no real asymmetry in basically trading like a boomer when you've got the account size of a zoomer, right? So if you've only got a couple of grand and you've got like a job and you can make it all back and that money doesn't mean much, and whatever, then yeah, you gotta know where you reside on the risk curve. So there's a reason that all the, like, for example, like we talked to Avi Feldman and Kyle Davies, all the big crypto funds. They either do venture stuff or they trade very, very high cap liquid stuff. And even then, they have to incur significant costs when it comes to entering and exiting a market, sometimes over days and weeks with significant slippage. If you don't have those limitations of size and market impact, that's an edge that you have to take advantage of. And where you take advantage of that edge is in the farms, scams, mid caps, low caps, shitcoins, etc. Like, does that make any sense? Tell me I'm making sense. I just wish someone told me that in 2017 when I was like a broke student at uni doing exactly that, trading like 1% of my trivial account size, trying to be a good trader when I should have been all in on Ponzi's. So this is me passing down some experience when it comes to the whole risk curve thing. Someone asked about how to find directional bias. If only I had a Medium article which literally says directional bias. I think we talked about this last week, didn't we? Crypto cred directional bias. Oh yeah, it exists. Oh man, the old me used to be so productive, writing articles and shit. Now it's just shit posting. But here you go. This is my article on directional bias. I haven't read it in 2 years, but I assume 2019 cred wasn't a total idiot. Go read that. That's 2 years old. So what? Does that mean it's bad? Can you tell me what is your sources on YouTube for learning trading? My channel. New education stuff coming? Question mark. If the market stays like this, then probably. I don't know what Sunday swap is. Do you rewatch the episodes to take notes? Do I rewatch my own videos to take notes? Is that what you're asking? I mean, I don't, but that shouldn't be surprising. Don't you think you become a better trader by not aping into Ponzi's and learning to trade with a small account? I think you can do both. But I think it's about being realistic in terms of where am I going to have the most impact? And where are the most returns? And where does the going to come from? Like, where does the real asymmetry lie? If you've got a small account, it's probably not with trading futures, although you should still trade them if you want to learn and get good at that. But you should take advantage of where you are in the risk curve and play with some Ponzi's. You still think it's a good idea to go to farms and low caps in this market conditions? In these market conditions, probably not. It's more of a general point, not tied to this current environment, but like in terms of contextualizing where you should shift your focus in crypto. Just leverage up to 125x on Bitcoin perps? Yeah. Cred, you have to write a book. I bought Ched's book by mistake. So excited I had tears in my eyes. Then it was 50 tips pulled out of day trading for a living. Ouch. Do you play Ponzi's? Yes. Bitcoin US dollar is my favorite Ponzi. By Ponzi's, do you mean legitimate BSC Ponzi's or like microcap legitimate projects? Both of them are Ponzi's. So yes. Gosh, yeah, I think that's kind of all I've got. I guess in terms of putting stuff on the radar, if I had to sell this thing, and again, if I want to sell something, like if I want to buy, I'm going to be looking to buy Ethereum because it's stronger on a relative basis. If I'm looking to short, I'm probably going to look at Bitcoin because it's weaker on a relative basis. That's something I generally try to stick to. I would mark out, as I mentioned, there's a bunch of like previous week's highs building up under 3K. And specifically, if we take this highest close, there's like a 2900 level at the exact top of the range. And the next level is all the way at the pre-breakdown cluster at 3300. So if the market wants to trade into these levels, I'm definitely open-minded. Technically, like purely TA-wise, if we see an overextension into 3K that then gets violently rejected, closes below, that's shortable under my system. My risk is then defined for me by the excess or the overthrow, and then target-wise, I mean, first trouble area, probably the bottom of the range. So something like that, I'm definitely keeping an eye out for if it wants to set up. If the market's bullish, and we get some actual continuation and Bitcoin doesn't look like a total piece of shit, then it's the good old A to B from range high breakout into last low pre-break. But yeah, generally speaking, market's still currently far away from levels that I care about. And because Bitcoin is relatively weak and ETH is relatively strong relative to one another, if I'm going to be looking to jam the red button, Bitcoin, green button, ETH, but that doesn't mean I'll ignore setups, obviously. Just trying to set some context. Do you ever pattern trade? No. Cred, you single. Jesus. Where to put USD? Question mark? Into my bank account, obviously. Bro, when finally nuke? I don't know, man. Have you like looked at the weekly time frame recently? Does this not satisfy your thirst for a nuke? Will you convert from USDC to fiat? No. I mean, technically USDC is fiat, right? But no, I want to keep that money so I can yeet it into spot when it makes sense to do so. Facundo, I think I answered that. If we test 30k, I'm generally a buyer, but not with a limit order. So I guess it's the second part of your question about specific PA. How many children do I have? 8. Any cons for using USDC versus USDT? Not that I'm aware of. Have you studied Haijin Lee? No. What a weird question. And yeah, someone mentioned something about pattern traders. You'll see a lot of this. I've already saw people like beefing over triangles, right? You saw this, and the whole argument goes that like, oh, you know, volatility incoming, and then eventually the textbook TA version is like that, right? What often happens in crypto is that the market either gets to the apex and then just nothing happens and then trends eventually, or the literal opposite happens, whereby it breaks out and then gets nuked, or breaks down and then gets faded. If you're going to trade triangles, be aware that it's very likely you get a trap at the boundaries, and also be very distrusting of the impulse that it breaks into. Like if it breaks here into resistance, doesn't mean you should buy a resistance just because the triangle broke. Same here. If you've got support below and the triangle breaks, don't sell support just because there's a triangle. I don't know what an inverse flag is, I'm sorry. How long until your mum calls quits on this stream? I'm in the basement, so she can't hear me. We can go as long as we like. Would you say trend lines and triangles are useless? Absolutely not. How do you respond to allegations do you have a monopoly on trolling Twitter? No comment. A little about my routine with regards to trading. I don't have one. I sit at my desk all day. I've got no life and no balance. That's my routine. No volume bars? No. I have a question. If you say be careful about fake outs, this sounds like some individuals are controlling the price. No, it doesn't. How is a fake out created? By everyone? Or yeah, I mean, there's like a market microstructure explanation. But when you get a lot of buying on a breakout and then price stalls, those breakout buyers, especially in the if funding is high and they're trading futures, whatever, but even just purely technicals, if they buy the top of the breakout and then the market gets stuck and starts to retrace, as A, people sell the breakout, B, those in before the breakout take profit, that creates selling pressure, which then puts those breakout / top buyers underwater. And big market moves, a lot of the time, come from traders being forced to make a decision. So as that profit taking and those new sellers come into the market on a breakout, those poorly positioned longs have the weaker hand. They start to unwind. Longs unwinding is selling, and then you get a push down. Thoughts about Miami BTC? None. I didn't go. Looks like fun though. What's your take on Main's neck? Is it normal? It is absolutely abnormal. There is nothing normal about his neck. Cred, can you go over your technique for catching the knife? Yes. Here we go. Here's a lightning round. 1. Find high time frame support. 2. Wait until low time frame looks like dog shit at high time frame support and you're thinking, bloody hell, mate, it's about to slice through like butter. Buy it. Here you go. This is my guide to knife catching. I don't know why I can't make this text any smaller. There you go. This is how you knife catch. You find the high time frame support. You wait until the low time frame looks weak at that high time frame support, and then you buy it. Like, I wish I were joking, but like, this will make your there's a really high probability that this will make your entries a lot better. The whole point of planning a trade is so that you're not emotional when the market gets to those levels, right? So for example, what you'll see a lot is you have a level here. What does the market do? It comes in, it's resistance, like a really clear level, and then you get a bit of a reaction, and then it breaks through and then starts like trading in a range, whatever. And then while the market's up here, and it's up a lot, and you miss this breakout, all the guys are like, oh mate, fucking hell, if I could get a pullback into this level, I would rob a loan shark and go all in. This is such a nice level. I wish I got a dip. I can't trade this chop. Please, God, just give me a dip. I'd be all over this, mate. And then obviously what happens is the market like literally starts to turbo nuke into their level, which is always a good buy, right? You don't want to see a grind, slow bleed into your level. You want to be playing nukes and aggressive moves. Those tend to be the best, especially if they're driven by liquidations. But obviously, what happens is as the market actually comes into the level, they think, oh, yeah, that looks a bit scary. Maybe I'll buy like this support here. Like this level's kind of good and it's not as scary because it's further away. Now, obviously what happens is they cope and make up this new level. What the market does, comes in, it wicks a little bit below and they're thinking, oh, I'm such a genius. I knew this level was a bad buy. I'm waiting for this one. And then it literally looks like this. And they feel like an absolute idiot because had they followed their original plan, amazing trade. This, fiction, cope, hallucination, right? So the whole point of coming up with a trading plan while the market's here is so that when it comes into this level, you're acting on the objectivity that you had up here rather than the panic you're experiencing down here. Does that make sense? And that's kind of what I'm getting at with this point. You find that high time frame or whatever compelling structure where you want to do business, and then a lot of the time, the low time frame entries, the really good ones, like the actual turning points, bottoms, whatever, they're not comfortable. They don't look good. They look scary. It looks like it's about to nuke. And that's where the peak risk reward, maximum asymmetry, whatever, that's where that comes in. You have to realize if you're waiting for confirmation, there's, whether you want to acknowledge it or not, there's always a built-in premium to doing so, which is that you give up some fraction of the move. Like, confirmation is never free. That's what I'm getting at. So if you define, especially entries on like a spectrum, right? Whatever, where here you've got risk reward, and here you've got confirmation. My trading is like here. I'll be buying the candle, well, whatever. Let's just do like this, right? This is the spectrum. My trading is like here. I come up with the level and I'll buy it when it looks absolutely terrifying dog shit. Now, yeah, sometimes I get wrecked. I'll buy the level without any confirmation and then it fails. But even then, because my level selection tends to be decent, there's a non-trivial chance that I can get out without like a full loss. Like break even for a scratch, sell some sort of bounce, whatever. And that's the benefit of doing business where it matters, right? Obviously, on the other end of the spectrum, if you're just trading the full confirmation, then good chance you're going to have to stomach some underwater and sacrifice risk reward for doing so. And it's for you to identify with your personality, trading style, market, time frames, whatever, where you fall within this spectrum. But it definitely exists. Like, the idea that you can just wait for confirmation and sacrifice no risk reward is generally untrue, in my opinion. And there's always that premium built in, whether you like it or not. So I consciously acknowledge that I'm not waiting for confirmation. I'm going to smack it at the level and then, zborgum. Whereas if you're trading here, just be aware that there's some premium built into it. Does this technique also work with selling rips? Yes. Cred, how do you then know when to take profit? I take profit at resistance if I buy support, at support if I sell resistance. I don't care if the trend will carry on to resistance, whatever. I've got my first trouble area. I've got a full video on my channel about FTA. If I'm buying support, I'm selling resistance. Specifically, the nearest level of resistance on the same time frame, for the most part. Rookie says that technique is basically the opposite of what I've been taught, going to give it a crack. I mean, that's how, like, quote-unquote real trading works, right? There's always a price to pay for confirmation. I've seen so many trading guides which are like, okay, so you have your support, and then the market comes into your support. When the market is here, you need 1, volume divergence, 2, RSI divergence, 3, OBV divergence, 4, 6 different candlestick patterns to remind you it's bullish, 5, bad sentiment, 6, negative funding, 7, your friends are panicked. It's like, dude, by the time you get like halfway through this checklist, the market's already here and you're buying the top, right? I forgot 8, 20 different moving averages crossing over bullishly on 6 different time frames. Like, it's not how, this is like TA nonsense. It's not real trading. It's just like hindsight cherry picking made up to look like safe trading. It doesn't exist. It doesn't. Just if you want to buy the level, just buy the damn level. Like, that's another point of hypocrisy that I've addressed on this stream before. People say, oh, I really want to buy this support, it looks so good, and then they'll usually enter like up here because they have confirmation up there. It's like, hold up, you said this level was really good. If you think the level's good, then buy the damn level, right? Or be honest and say, I'm not sure about this level, but if I get bullish price action, then I'll buy it. But like, if you think the level's good, then the best area to do business is on top of it, or even slightly below it, because this is likely going to be the wick portion before a move up, you know? I've always heard that futures don't influence the price of Bitcoin. Not true. futures, leverage, etc. becomes really important when open interest is sufficiently high relative to market cap. Because a big futures market can definitely push price around, but also give you very useful information as to how the market is positioned. And that's when stuff like funding and other, the basis and other futures data that we're used to, when open interest is sufficiently high, that's when you can get a really good read and useful context from futures, Premier, and other futures data. So like right now, I'm barely looking at futures data because open interest is like a tiny fraction of what it was just a couple of months ago. So I'm not as keen on the futures market because I think it matters less because it's so flat and so wrecked. Does that make sense? And that's why I'm sure you've seen over the past weeks people saying, "Oh, funding's negative moon, funding negative moon, funding negative moon." It's like that's not enough. Especially if the futures market is like flat and dead generally, the fact that funding is negative isn't going to rescue it necessarily. And not to mention, you have to realize funding can become negative. Like, why does funding become negative? It's the perp, the future, trading at a significant discount to the index. Then the question is, okay, how can the future trade at a discount to the index? Now, yes, you can have a lot of shorting of the future to push it down to trade at a discount to the index, yes, but another mechanism for negative funding is if spot Bitcoin, so the cash pairs, get sold really fucking heavy, they nuke, and that pushes futures down with them. And because there's a liquidation mechanism, the move in the futures is exaggerated compared to the move in spot. And then you have futures trading below spot, and then you get your flat/negative funding. So it's not always the case that negative funding means bullish. Sometimes it comes from spot nuking Bitcoin so hard that you get liquidations in futures, which is what keeps them below the spot price. It's not like an automatic bull signal. Do you know what I mean? Does that make any sense? It looks like Chitik Emmanuel has completely ignored the last 20 minutes of what I've spoken about. His question is, isn't it better to wait for the bounce and a retrace to entry? Isn't it playing it safer? I mean, sure. I'm not like, I don't know. Look, the whole point of what I've been trying to convey is that there's no free lunch. If you want confirmation, you're paying for that confirmation in the form of some sort of risk to reward sacrifice, or an inferior entry, or a trade you'll be longer in that trade, whatever. There's no perfect world in which, or it's quite rare, and you shouldn't rely on the idea that you just get this magical thing called confirmation, and then you also get the best entry at the same time. By definition, the people with the best entry are those who didn't wait for confirmation and were buying the highs or buying the lows to capture that superior risk to reward. Now, yes, there are setups which do this magical retest, whatever, right back at the level, and you didn't have to knife catch anything, but generally speaking, from like a trading system framework point of view, there's almost always some sort of trade-off between risk-reward and the amount of confirmation you wait for. Thais says, trying to get the actual confirmation usually ends to ending up FOMOing. I kind of agree, man. Are you going to update your videos, Cred? If the market stays like this, I'll update a few of them. Quite a few of them are up to date and really good. Market structure, trade management, first trouble area, those are all up to date and good videos. Retests, but some of the older ones, risk management, horizontal support resistance, entry triggers, those definitely need a bit of Bit of a makeover? I don't know. I didn't speak England. Binance charging fees for liquidations? Yeah, that sucks. What timeframes do you look at to find high timeframe support? Weekly and daily. Rookie says, so I assume that you're buying 30k first go around and not taking Duck's risk-defined approach. I mean, I think him and I both bought that first liquidation-driven nuke. I bought half Bitcoin, half ETH. I think he just bought Bitcoin. My entry was better, but his exit was better. But we both played that drop. Yeah. And again, we use that as an example to talk about like confirmation. Like when I was buying that nuke, you can go look at the tweets and do the whole Sherlock Holmes timing thing. Like, I'm buying this drop. If I'm waiting for confirmation in, say, the form of a candle close, even using the hourly time frame, right? I've already given back, and this is on futures, bear in mind, I've already given back 8% of the move if I'm trading the candle close, right? And even then, look at this next candle. Chances are, if you're being very protective and you've got your stop at the low after this candle close, the next candle comes in and takes you out. So I'd just rather buy the nuke and see what's up. And a lot of the time, the idea of confirmation is just made up. Paul says you can wait for confirmation to improve your risk reward if you wait for a pullback. Yes. Correct. What made you decide to wait this time with buying high time frame support around 38, but instead waited for the lower level to buy? There's a really good answer to this, which is that when price first hit the 38.40 level here, predicted funding was actually going up. So what was happening was, as the market was nuking, apes were buying this dip with leverage. And that's just a really bad sign. I mean, also the price action was crap. It just closed below and retested. It just didn't look good, generally speaking. Like, look at this bit of price action. That's not nice. But specifically, I was looking at short-term futures data, and predicted funding was going up as the market was nuking, suggesting that dip buying was happening on leverage, which doesn't generally lend itself well to a bottom. So then my idea was, okay, we're going to just liquidate all of these guys and go for like some crazy extended move. So 32 and anything below that probably going to be a wick. How did you not get stopped there? I was buying spot. I didn't have a stop loss. I don't use stops for spot trading. I use stops for futures trading on my shorter term strategy. If I'm trading these do or die, bounce or go to zero setups, I'll typically use spot without a stop. Just how it is. Do you day trade in this period? Not recently. Not recently. Okay, really long stream. Hope you learned something. If you did, like the video. That's some useful confirmation. Wink, wink. Thank you to Blockfolio for bringing you Technical Roundup. Mobile trading app. Buy your family some shitcoins. I recommend ETH, because it's probably going to stick around. And tell them not to check the price if the market's going down. Go to trletter.com. Technical Roundup, the newsletter, comes out tomorrow in around 24 hours. It's free. We send one email per week. It's really good. It definitely trades better than the Duck and I, which may not be saying much, but it is still worth mentioning. That's all I've got for now. Hope this was helpful. Remember to wait for 10 different forms of confirmation before turning off the stream. So wait for my voice to disappear, wait for the video to stop, wait for me to start tweeting to suggest I'm not live streaming anymore, and then when you've got all that confirmation, you can close the tab. That's all from me. See you on Friday.